It's been a good year for U.S. stocks with the S&P rising almost 11%, but the Canadian TSX Composite is up more than 17% year to date. So welcome to Trading Nation. I'm Dominic Chu, joined by Wald over at Oppenheimer, Dennis Davitt, Harvest Volatility Management. So guys, we talk about our nice run here for the markets in the U.S. A commodity currency-based country stock market in Canada doing so much better. Dennis, in your mind, why the difference in performance, why the gap, and can it continue?
Well, one of the things that really jumped out to me when I first started really digging into this was I thought it was going to be all based on the currency, the overall strength in the dollar driving our market, helping it outperform. But the reality is the currency's only moved about 3%. And when I look at what most of the TSX or the Canadian stock market, their version of the Dow Jones is comprised of, there's a lot of banks and there's a lot of oil. So those are two comeback kids for, in terms of stocks to have owned. So if the majority of your, like as you mentioned, the commodity-based market, that's a large part of the returns. The other large part of the returns is they are our neighbor to the north, and we've seen a huge rally in U.S. markets. So building on renewed economic growth, perhaps inflation coming back into the United States, that combined with an index that leans more towards financials and energy, it explains a lot of the real outperformance.
All right, so Dennis, there's fundamental factors at play here, and you just listed a good number of them out here. But Ari, if you take a look at what the performance has been like, you take a look at the charts, you take a look at some of the technical aspects, is this something where you think the momentum for the Canadian stocks can continue? Will the outperformance be there, or does that gap tend to shrink?
I think it's right. It's an absolute versus relative debate. I think some of this relative outperformance has really come after some significant underperformance for the TSX, playing a little bit of near-term catch-up. And, I think back to comments we were making in the spring when asked what is the key risk facing the markets, our thought was that it was that this technical weakness in ex-US equities like the Canadian TSX would drag down the U.S. What we're seeing instead is that the S&P's lifting up all these other markets around the world, and just given their beta and how much they've underperformed, they're really catching up in relative terms. Now, charting and looking at the TSX in terms of absolute price, I think the strength continues. It's broken its trend of lower highs. I think it's in position for a breakout to new highs. On a relative basis, for the long term, we still have a slight preference for the U.S., for the S&P 500. So there's some relative considerations here, but I think in absolute terms, that Canadian TSX is going to be setting up for new cycle highs over the coming months, Dom.
All right, so that's it. Now, Dennis, maybe last point to you here. As you start to look at the way the story is developing here, is there a particular strategy, a trade that you're looking at to kind of take advantage or perhaps play the mean reversion, if you will? What do you think is the opportunity for traders here with this particular setup?
Well, I mean, the funds that we run at Harvest they're volatility-based funds. So I just tell everybody, if you are fortunate to have been in these stocks, you should be out there and you should be buying some sort of insurance against this real outperformance. If you feel that Canada is directly linked to the price of energy and you're looking for a lesser expensive way, go buy some puts on the crude oil contracts, or even go buy puts on the S&P 500. They're really low. Put demand is at an all-time low. Call demand's at an all-time high. So go out and buy some puts against those assets that you were fortunate enough to own in the rally.
All right, perfect out there. Thank you very much, Dennis Davitt over at Harvest Volatility, also Wald over at Oppenheimer. And thanks for watching Trading Nation. We got a good amount to cover here with Canada versus the U.S., but we'll see you next time around.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.